Many of the sanctions against Iran's oil industry have been lifted, but how fast can the powerful OPEC producer ramp up production and exports? Joining me to discuss this is Richard Mallinson at consultancy Energy Aspects. Richard, Iranian officials have in recent days and recent months talked about ramping up production immediately after the lifting of sanctions by 500,000 barrels a day. How realistic is this?
Well, clearly the Iranian government's got some pretty ambitious plans, but I think they're going to have a little more of a gradual recovery. They're depending on two things. One is to take existing fields and ramp up the amount that those are producing, and the second is to bring several new fields online. But with the existing fields, they've faced years without Western technology, Western investment, and I think the maintenance, the state of those fields may limit how much they can bring back overnight. With the new fields, we've seen several years of delays, and I think they're not necessarily all going to be ready yet.
What are your estimates for the increase in production and also exports?
So I think over the next couple of months, we'll see Iranian production going up by, say, 250 to 400,000 barrels a day, depending on how many of those new fields come online. And I think almost all of that is going to go into the export market, because at present, the domestic market is well supplied, but it's exports that they really want to target, they really want to increase. It's about then, can they find the buyers? Can they, as they get back into markets like Europe, other parts of Asia, how easy is it to market their crude and to displace other exporters?
We can see from this chart here that production and exports have really taken a hit under sanctions. But any increase from here on in, what effect will that have on price?
Well, yes, as we can see, before the latest round of sanctions, the ones that have been lifted were implemented, Iran was producing about 3.6 million barrels a day and exports were closer to 2 million barrels a day. That fell off a long way, and Iran wants to bring all of that back as quickly as it can. The oil market's already oversupplied. It has been for quite a long time, and that's what's really driven prices lower. The quicker and the more that Iran can bring back into the market, the more pressure it will put on prices. And certainly at the moment, the focus or the concern in the oil market is that there's going to be a large return very rapidly. But I think as we get later in the year and we get a better picture of the Iranian recovery, it's only going to be one of several moving parts. We're also going to be looking at the declines in US production, the extent to which the rest of non-OPEC supply is going down, and of course what other OPEC members are able to do.
And just on that point, oil prices are around $30 a barrel. So what happens when you throw Saudi Arabia and other big Gulf producers into the mix, because they have shown no signs of relenting? How does that competition play out now?
Well, I think from my point of view, this $30 price is not sustainable for the global market in the long run. But all of the OPEC producers are generally putting as much oil as they can into the market. That's in part about just generating whatever revenues they can to meet their budget, but it's also about market share. We've seen Saudi Arabia and Iraq increase their production significantly last year, and they're going to want to sustain those levels, even if they can't necessarily increase production further. But they've also been putting oil into markets, particularly in Europe, where they anticipate Iran is going to want to return. So they're trying to get in there ahead of time and prevent or make it more difficult for Iran to win those buyers back. And I think what we're likely to see is Iran, particularly, but also Iraq, willing to offer discounts, to offer favourable terms, to try and lure buyers away from Saudi Arabia and the other Gulf states. And none of that is going to make life within OPEC any more comfortable or any more diplomatic.
Speaking to some of the Iranian officials, they've said that they are not very keen to lose out on price. So what other tactics could they deploy? Is it sort of oil for goods or other sorts of tactics that means that they may try and get ahead that way?
Well, this is a dilemma for Iran. On the one hand, it knows that to lure buyers back, it needs to offer something attractive of favourable terms. But on the other hand, especially at current prices, if it offers cash discounts, that's going to eat into the revenue it desperately needs for its budget. So I think we will see them looking at what creative ways can they build buying relationships, so exchanges, favourable terms, for instance, longer payment terms. So the price is there, but refiners have a little bit longer before they need to meet that bill, which can really help them with cash flow. But all of it, I think, is also going to be complicated by the US sanctions that remain in place, in particular the ones that will make it difficult for Iran to sell and transact in dollars, because no US bank can be any part of a transaction.
Thank you, Richard.